Well, good afternoon. This is Mr. Not Advice. It's August 19th, 2026. This is my end of the day wrap up. As always, this is for entertainment and education purposes only. Okay, so big news today, a couple big news items. First of all, the big news was that Treasury Secretary Bessent unleashed QE Lite this morning, quantitative easing light. And that surprised the market and triggered major moves in the dollar down, gold up, and Bitcoin up. And of course, bonds. His primary target is the long end of the curve, the 20 and 30 end, try to push those down. Initially, stocks were supported by Bessent's move, but then banks were dumped, oil drift higher, and momentum continues to get hammered, as well as the fact we had slightly hawkish notes from the Federal Reserve. So, as a note, systematic long short managers are now down 1.4%, the worst day in more than 2 years. Most of the losses were driven by momentum stocks being driven down today. The biggest news, as I said, was this morning's report that Treasury will increase long end buybacks by at least $2 billion per operation for the remainder of the refunding quarter. So there are 9 operations this quarter. This is how it looks. The Treasury is issuing 111 billion of 20-year and 30-year bonds combined per quarter, or 444 billion per year at current auction sizes. Today's increase is equivalent to a 16% reduction in 20-year and 30-year supply. Long end buybacks will now repurchase about one third of all 20-year and 30-year supply auctioned. So they're buying their own debt. The result was, as Besant expected, a plunge in the long end of the yield curve right here at the 30-year crashed. It is most likely that the long end of the curve is going to have a difficult time. Rates will have a difficult time moving up because Treasury is now showing a preference to keeping long end of the rates down at the expense of the US dollar, which is what I am watching. I'm expecting this to not be successful. Goldman Sachs also does not think that yields need to reprice materially lower, since, in their view, deficits in AI related supply will continue to weigh on duration, preventing a deep rally in response to the increase in buybacks. Put in other words, the as I've been talking about for the last couple of weeks, the AI ecosystem debt funding is sucking dollars out of the treasury market. One way to help combat that is to come in and smack down the long end of the curve. While Besant framed this as a liquidity operation, this really is to suppress the long end of the curve because there's fear about the 30-year and 20-year rates moving up so strongly over the last couple days. However, while this is going to dampen that pressure, because that pressure is primarily coming from two areas, which are the sheer amount of funding going into AI, as well as worsening sovereign fiscal pictures as countries continue to take on debt. Summing it up, today the Treasury confirmed that the record AI debt supply is crowding out government issuance. That's from Zero Hedge posting today. Rate hike expectations were basically unchanged on the day. Had a knee jerk reaction in gains in the stocks at the open, with small caps outperforming. That's a short squeeze, while the NASDAQ lagged amid the momentum shift that I discussed earlier. But as the day wore on, the S&P managed to cling on to very small gains by the close. Small caps are going to benefit the most early on. Why? Because they're the most sensitive to interest rates and they've been under the most pressure. Mega caps today were bid overall, but not as strongly as small caps. All the AI leaders were down today, led once again by optical networking, which I think is the third day in a row, by the way. Tech lagged on the day, but healthcare absolutely screamed, and that was on based on the news from Moderna, which rose almost 150% on the back of a new personalized vaccine, which, if given in combination with a drug, that has stopped skin cancer returning in patients during a trial. Financials lagged again today with the worst 3 day drop since May. Basket of stocks measuring momentum over the last 3 months was down today, as well as those stocks that measure momentum over the last 12 months were down today. Actually, for the last 2 days. This puts it in more of a perspective, looking at this peak here at the middle of June before momentum stocks started bleeding and pushing down very strongly. Some of this obviously has to do with the end of July sell off right here, too. Day was the 57th day this year when price and breadth have moved in opposite directions. This is becoming a growing issue. Quoting Jonathan Krinsky, the fact is that we still have yet to have an 80% plus downside volume day all year. And at some point, the music stops. And if there are no open shares, investors are going to raise cash. And that creates the broad based high correlation sell off that has been so elusive over the last 10 months. He finishes by saying that he thinks that we are closer to that day than many are prepared for, which is supported by the fact that they put call skew is now at record lows, which shows that very, very few market participants are buying any downside protection at this point. US dollar hit 3-month lows today. That's based on the fact that the Treasury is focusing on yields and not on currency. Question on whether or not this will last remains to be seen, so I'll be monitoring that very closely, although we have January leaps. Additionally, the fact that Treasury is going to help suppress the long end of the curve instead of support the US dollar. That was very bullish for gold, which neared 4,500 today. 4,500 is a key level for gold, by the way, as the 200-day moving average sits at about 4,507. However, gold continues to diverge from real rates, with today's decline in real rates maybe starting the convergence, meaning these rates will start coming down. Remember, on this axis, as you go up, that actually means rates are coming down. Bitcoin saw its best day since the start of the war. Coin got a reinforcing report out of BlackRock today, who, and I quote, said, "We view Bitcoin's 50% pullback from October 2025 highs as a positioning correction rather than a change in its investment case. Speculative excess, I'm still quoting, now largely purged. We believe Bitcoin's recent episodes of elevated risk correlation should normalize lower, consistent with its longer term record as a low correlation diversifier." They conclude Bitcoin's underlying investment case aligns more closely with that of gold. Bitcoin, on the back of this move today, was able to move above the 200-day moving average. As I've been keeping you appraised of, refined products continue to move higher, with diesel leading the pack. In the US, gas pump prices keep rising, which is not good, notably decoupled from the crude amid the refinery constraints. Overall, a mixed market today. If you were not in something that was interest rate sensitive, TCT was not able to trigger a buy today, was unable to get above that 50-day average. EOSE, I need to wait for tomorrow to see if we get a reversal off this pretty strong hammer candle. Although we had a slightly above average volume today at 27 million shares, it seemed to pick up later in the day today. I sold and closed my ConocoPhillips today. I did that at a higher price. I think it was closer to 131.50. I was able to close those all for, in 9 days, a 112% gain on those calls. You can see from this chart, this is where we entered, this is where we ended up. Wheat is also attempting a breakout here. We are into the gap now. The high here is 25.23. We are at 25.34. I fully expect wheat to take out this 26 level, by the way. I'll be looking to get long Bitcoin tomorrow, maybe some gold, as well as watching PCT as well as EOSE for a break higher. Other than that, not a lot to report. Spent about a frustrating 2 hours this morning trying to trade the market. Not able to get an entry on my trades, nor was I able to scalp an entry. It was just a very, very tired market this morning. I'll have to wait and see what the volumes were today, but I suspect they were still probably around a 3 or a 4 out of 10. So I hope you had a great day. I will see all of you in the boardroom tomorrow.
We gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm. Feel like I'm volatile, explosive. Get close enough, you notice. Your girl act out of character.